Hello, everyone. Welcome back to another installment of my weekend series dedicated to price action based technical analysis. Today, our focus is on the GBPUSD market, which witnessed a remarkable 2% bullish surge in the last week's trading session, fueled by broad market risk appetite amid speculations that the Federal Reserve has concluded its interest rate hikes. In our previous trading setup, we capitalized on the momentum, securing over 1,300 pips from multiple buy entries, driving the market all the way up into the 1.2500 zone. For those of us who have been part of this profitable journey, congratulations to you guys. I'm very, very excited for this beautiful opportunity we had last week. If you had missed these commentaries and want to catch up for educational purposes, you can find the link in the description box below or at the top right hand corner of your screen if you're watching on my YouTube channel. With recent disappointing United Kingdom economic data and the anticipation of the Fed's meeting minutes, we will be exploring how the pound sterling may perform this week amidst ongoing uncertainties. As always, we will unravel the potential trajectory of price action for the upcoming week, utilizing fundamental tools such as trend lines, key levels, and of course, chart patterns. Before we proceed, it's important to stress that this video is for educational purposes only and should not be considered financial advice. My aim is to provide insight into the GBPUSD chart, enhancing your understanding of price action analysis. Remember, Forex trading carries inherent risk, so always exercise caution and consider consulting a professional financial advisor before making any investment decisions. Without further ado, let's delve into the details. Now, to start with, this week we will begin on the daily time frame where I have a beautiful trading setup which we will be using for this week. And what I did on the daily time frame was to take into consideration the nature of price action around the month of June, July till the present moment to see how participants had played out during the course of time. And if you look at the structure closely, it is quite clear that price action had been finding lower highs, giving us clues and insight into the character of sellers in this market. And as you will see here, after connecting the series of lower highs, we have a couple of descending trend lines here that we will be using to guide our trading decisions for the upcoming week. However, something interesting is going on in this market. Now, despite the series of lower highs captured here, you will see that price action is yet to find a lower low, giving us signs that buyers may likely be taking over the market anytime soon. And if you look at what has been going on here since the beginning of the month of October, despite the series of lower highs, you will see how the 1.20400 level had continued to negate all attempt by the sellers to break through that structure to form new lower lows. And as a result of this, we saw how buy pressure resumed, price action transitioned into what looks like a reversal pattern, maybe in the form of a double bottom structure, leading to the breakout of both the 1.23200 level and of course this descending trend line to give us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. And of course, you know how we do it. When price action breaks out of key structures like this, we expect that some point in time, there might likely be some retest of structure, which actually happened a little bit last week to incite an uptrend situation. Now, with the current market structure we've identified on the daily time frame, you will see that we are at a crucial juncture in the market where, after breaking out of that descending trend line, we have a situation where price action is confined within the 1.25 and the 1.232 area. Now, to capitalize on the next potential move, we will have to scale down into a lower time frame so we can have a detailed understanding of what is really going on there. And in that regard, I have a beautiful setup on the 4 hours time frame, which I will be sharing with you in a moment. But before we dive into that, let's run through the economic calendar so that we can keep tabs with the fundamental factors that will be driving the market sentiments for this week. And of course, you know how important this is, as these fundamental factors usually manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on the next move prior, during, and even after this event. So, based on the assets we are looking at the moment, we will be focusing on high impactful event from both the United States and the United Kingdom economic dockets. Now, for this week, we have a handful of impactful events from these economies. The first one here is coming in on Monday, November 28th, and that is the Bank of England's Governor Bailey's speech. And we all know how important this speech is, as it gives us an insight into the central bank's outlook on the economy, potential policy shifts, and interest rate changes that may likely happen, which will of course impact our trading decisions and market sentiments. Then we also have the publications of the FOMC minute record, which will provide detailed accounts of the discussions, debates, and decisions made by the committee members regarding monetary policy, economic conditions, and future policy actions. Then we also, on Wednesday, we have the monetary policy hearing report from the United Kingdom, and on Thursday and Friday, for both economies, we will be witnessing the publication of the S&P Global, which covers a wide range of topics, including market trends, credit ratings, economic indicators, and industry insight. So the week is jam-packed with high-impact events, and of course, we do know that the anticipation of this event usually affect the market sentiment, which would reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame, where I was able to identify a simple trading setup. Now, what I did on the 4 hours time frame was to consider the character of price action in the last, let's say, 3 to 4 weeks now. And what I could find here is how price action has interestingly transitioned into an ascending channel. Now, if we connect the series of higher highs, we have the resistance line of the ascending channel, and if you connect the series of higher lows here, we have the support line of this ascending channel. And you see how uniformly price action has been increasing the bullish momentum, as you will see here. Now, in addition to these trend lines is the key level, which I will be using to guide my trading decisions for this week, and it's duly situated at the 1.2400 level. As you will see how this level had played a major role in determining the direction of price action since the beginning of this month. Now look at what happened here the first week of this month. We saw how this area was a selling niche in this market before it was finally broken during last week's trading session, as you will see here. And ever since price action has broken out of the 1.24 area, we have seen how it has become difficult for sellers to break through this area, as every attempt by the sellers to break through had been met with strong resistance from the buyers. And this development here falls in line with the expectations of a breakout of structure, retest to inside an uptrend move. Now, in addition to this observation, I'm beginning to notice something like a double bottom structure around this area, which could incite the next wave of bullish momentum. So I have a neckline around the 1.24400 area, which already has broken. And as long as price action remains above both the 1.24 and the 1.2440 area, I will maintain a bullish bias here and looking out for more opportunities to capitalize on the next move if price action breaks out of the 1.25050 zone. Now, in as much as we are looking out for an uptrend continuation setup here, we cannot ignore the potentials of sellers. And remember that price action has been within this ascending channel in the last 3 to 4 weeks, and there is a chance that price could still retrace, maybe breaking down the 1.24 area back into the support line of that ascending channel to respect it one more time to incite an uptrend situation, or even break it down to incite a sell-off here. So these are the scenarios I will be looking at for this week. And how did I get that potential buy zone? Well, very simple. I just use my Fibonacci retracement tool, run it through the previous impulse leg and aimed at the golden zone area, which is correctly situated between the 50 and 78.6% of that impulsive move. So these are my views here on the GBPUSD for this week, and trust me, I will be with you in the comment section of this video to give you updates after monitoring how participants in the market will be reacting to this current structure during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decisions, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it helps the algorithm promote the video to a wider audience of traders who may find this material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.